I think we're trying to figure out now what is next, because this was a big week for Deutsche Bank, and of course we did get the earnings results not positive at all today. So what should we expect might be the next chapter for Deutsche Bank?
Well, I think from our point of view, in terms of the ratings, actually the merger would have been a possible negative factor. So actually now they've got the merger off the table, I guess they'll be able to focus on executing the existing strategy, which they've still got a long way to go. I mean, as you said, the Q1 results, they were weak in absolute terms, definitely, but they were not bad compared to expectations, and it was a difficult quarter anyway for global investment banks. So, and Deutsche has managed to deliver on some of their targets in terms of the cost reductions. So I think we'll have to see how they're able to deliver in the coming quarters and get the bank in perhaps a more stable revenue cost situation, and then there's an opportunity perhaps to consider the next steps.
Well, that's the question. I mean, stability is a good thing. That would be terrific, but it's going to have to move forward at some point. I'm going to put up a chart here. You might say it's an unfair chart comparing JP Morgan with Citi with Deutsche Bank. And Deutsche Bank just is along the floor there, pretty stable, pretty solid, but it's really going nowhere. They're not going to be able to get that moving up with just cost cuts, Elisabeth, right?
Yes, and it's a challenge for European banks generally, and the interest rate environment hasn't helped them. But there are other European banks that are doing better than Deutsche Bank. So it is possible. They need to kind of build up the diversification of their revenues, because compared to the other European banks, they are more dependent on the more volatile investment banking, market-related activities. And you know, the US banks have something of a home market advantage, because the US capital markets are so big, and that provides a more stable revenue base for them. So it is tougher for the European banks.
And I do wonder about, you know, Elisabeth, with Deutsche Bank, in some regards, as they look to do diversification, they also need to move into areas where they might be able to have riskier plays, and then, of course, the rewards, there's the potential for that. But currently in their current state, they can't do that. I mean, regulators are watching them very closely. So I wonder, how do they grow into other businesses that might provide more potential, more growth on the top and bottom lines in their current state?
I think it's true. You're right that they probably have had to dial back on the risk they could take over the past 18 months, as they were certainly stabilizing as well the sort of the capital and the liquidity situation. But those are pretty solid. I guess it depends how well they're able to finesse the parts of the investment banking business to focus on the areas where they have an advantage, and we'll see how well they do at that.